All right, episode 19 of the More Doors podcast. Today, we have a TakeFlyte Takeover. You're going to find out what that means right on the other side of the intro. Intro now. Boom. All right, episode 19 of the More Doors podcast. Today, we've got some amazing guests from TakeFlyte Capital that we're super excited to bring on. But first, we've got to thank our incredible sponsors, starting with Deep Blue Capital. Go to deepbluere.com if you're looking to build wealth, enhance your portfolio, maximize your tax savings, all of the things. Check out deepbluere.com, the upcoming projects that we have, and how you can partner, with us and secure your financial future.
And if none of that interests you, they do have a really good newsletter.
They got a pretty decent newsletter.
Yeah.
I don't know who writes it,
but it's good.
When you're done with that, check out Tore Studios, TORE studios.com. If you want to start your own podcast, your own video production, maybe you just need advice on how your home studio is set up and enhance what you're doing from a content creation standpoint. Jesse Showalter over at Tore Studios can help you. Check out TORE studios.com. Boys and girls, I am excited for this one today.
Hell yeah.
So I'm going to turn it over to you for a second just to kind of introduce everybody, because we're in a partnership at Deep Blue Capital,
right,
which is incredible. And the more the merrier, I think, in this business. You have other partners that you have done incredible things with. They have a whole portfolio with that you really got started with in this business. And we are really, really, really excited to have them on today. That's Mike Terkel, Chris Balzaretti, and Tristan Pham.
That's right.
From the TakeFlyte Capital crew. So I'm going to turn it over to you to intro everybody, but we're going to have a little bit of a kick around with the boys today. So welcome the TakeFlyte Capital crew. Why don't you kind of do an intro for everybody?
Sounds good. So we're like concentric circles over here. It's crazy. We got two circles coming together with a little bit of overlap, and I'm excited to have these two worlds merge for the first time today. So originally, Mike and I started a partnership called TakeFlyte Properties. So Mike and I have known each other pretty much since I moved to Texas in 2014. Our kids were in the same daycare together. We worked at the same company for a little bit. And then we did kind of the birthday party circuit for a while.
Yeah.
And one day I overheard him at a birthday party. He's like, I really want to get into real estate. And I was like, me too. So we started to talk. We went out to lunch, talked about it. And one day he's like, if you ever got a deal, call me. We'll take a look at it. So right around that time, I had made a blind offer on a deal in Arlington. And the offer got declined. And like 3 weeks later, I got a call from the broker, and she's like, the other offer fell through. They're asking if you want it. And I was like, yeah. And I hadn't seen it yet. So I went to go do a drive-by, and the place was in shambles. And I'm like, I could do this on my own, but if I did, it would take every penny I had.
Mm-hmm.
Right. And right around that same time, I was listening to an episode of Bigger Pockets. And Brandon was like, 50% of a deal is better than 100% of no deal. I'm like, lightning just struck. Where's Mike? I think I texted him at like 10:30 at night. I'm like, can we talk tomorrow? He's like, sure. And we stayed up late for like 2 weeks, knocking this deal around, like fending off urgency from the broker. And we ended up taking it down, and it's been, a hell of a ride in the last 6+ years together. So, Mike, why don't you take a second, say hi to the team, say hi to the audience, give a little bit of background on yourself and from your perspective, kind of what we started to build together.
Yeah. Hey team. Hey everybody. I think you captured it pretty awesome. That was, and those were back in the days, Matt, when we were like, creating our own underwriting models and trying to figure out how to underwrite everything. So, but yeah, I think, Matt captured it succinctly. So, I've been interested in real estate ever since I was a child. My father, he had sort of a side business, investing in real estate where, he did a lot of development. He did a lot of single family homes. So the bug for me was kind of planted, from, those early days. And so I started with my first rental property. Was actually my first residence. My wife and I built it, and we moved out, and we decided, hey, let's keep this. Let's see if we can, build up some equity, get some passive income coming in. And so we did that. So we rented it out. It was great. And then I was always on the hunt for kind of what's the next deal. And as Matt, said earlier, when we were working together, we kind of connected, and Maple Street became our first property. It was 8 units. So that's how we got there.
8 units for that first property. I was going to ask how big it was. That's awesome.
It was 8 units. Yeah. So it was an amazing opportunity, but I don't think either one of us really knew what kind of shit show we were walking into, right? So we go out there for a walkthrough. Mike hadn't seen the property yet. We go out there for a walkthrough. Mike brings this contractor with him, different contractor, Tristan. It's before we knew you. Okay, don't get offended. And the first unit we walked was a hoarder unit.
Oh, you're kidding.
And she had like 7 chihuahuas and cats and all kinds of stuff in this apartment. And there was like trash 18 inches deep. The contractor's like throwing up as we're walking through the unit. And we kind of looked at each other like, yeah, we can do it. Yeah. And we were all both like, and we ended up doing it. But man, we cut our teeth on that deal, and it took us probably 6 or 7 months to turn the property around. But we, it ended up being a great learning experience for us.
Yeah, I think everything you could potentially learn happened on that deal, right? Really? Contractors, hoarders, tenants that we had to evict, huge turn, flip, rehab. I mean, it was everything. So we really cut our teeth on kind of that first one.
Contractors is one of the biggest problems in this business here. So what happened to it? What happened to the contract, and how did you deal with that?
Well, why don't you go first on that one, Mike?
Well, I think we went through the bidding process. We went through a couple different guys. Obviously, we were trying to be very thrifty and cost conscious.
We know you, Mike.
I had sort of Frisco taste where I wanted quartz countertops, all this nice stuff, and
the Terkel finish out, we call it.
Okay.
But I think the core came down to it. We ended up hiring somebody, and I think ultimately at the end they did a decent job, but it was just a lot of oversight and a lot of management, right? Lots of delays, things would come up, finding the different types of supplies that we wanted, where we would go get them. So we were kind of heavily involved in that. And I think in hindsight, looking back, getting sort of a GC that could sort of just facilitate it all would have been a lot easier. But I don't know, Maddie, anything to add from your side?
No, I think Mike covered it at a very high level, but so we ended up hiring this handyman who gave us a really good bid, and he had this helper guy. Right. And he would bring the helper on occasion when he could find the guy. Right. And, about 3 or 4 months into the deal, they went from a 5-day work week to the Howard Stern 3-day work week. And then it was 2.5 days because they were getting, beard up on Thursday and Friday after 12. And some days they wouldn't be out there for days at a time. So it was just constantly staying on them. But it got done. And we raised rents there from 300 or 400 to 650, and that's $750. I think when we sold it, we were at $850 a month on these 2-bedroom 650 square foot things, and it was just a cash cow for us. Like when we had Gino on the show a few weeks ago, I think we were at 150 or 175 profit per unit per month.
Wow!
Right, and so it was all the heartache was very profitable for us, and we self-managed that.
Right.
Yeah.
Right. So there was like the first month or two we owned it, I got a call from a tenant about a leaky shower on Mother's Day.
Oh no.
So I grab my tool. I say to my ex-wife, I gotta go. And I grab my toolbox, as if I know what the hell I'm doing. I drive out to Arlington.
I remember that.
Go fix a shower. And I get there and I'm like, Yeah, we got the full plumber. And then I drive home. I'm like, I took care of it. Don't worry. I was back in time for dinner. That's fine.
There you go.
Good experience.
Yeah, exactly. But true story. Mike let me handle the collections.
Did he?
Yeah.
Yes, Mike let me handle the collection. So I'd always get a text from Mike on like the second or third day of the month. And he's like, how's the rent coming in? I'm like, don't you worry, Mike. I'm up. I went 3.5 years without a miss.
Yeah.
Whoa.
3.5
With
years.
no delinquencies?
Yeah. And we had a couple of late pays.
But you got them, right?
We always got paid.
Yeah.
And the only reason the trend broke was because one of our tenants, who was a Section 8 tenant, had like this gangster boyfriend who kicked the door in and completely vandalized the place because they were having a fight one night and we had to like get her out.
Okay.
But that was the only reason the streak broke.
Wow.
I was beating myself up for it. I felt so bad. I was like, I let him down.
Oh,
Damn it. You know?
That's a hell of a streak, though.
Yeah.
So you get the first deal done.
Yeah.
So what's the next step? How does the TakeFlyte world evolve from there?
Well, I mean, so Maple, the 8 unit was our first acquisition. And then interestingly, the journey, we pivoted a little bit. We acquired some townhomes. So we went sort of the single family route. We got a portfolio of townhomes that we actually still own and have been performing awesome. We dabbled a little bit, we did look for some additional multifamily properties, more on the smaller side. I would say, Matt, probably under 12 units. We kind of searched around and put offers in, here and there. We ended up purchasing a 4-plex in East Texas, which we still own, and has also been performing really, really awesome. But I think where the realization, at least for me, came is just a lot of the work and overhead of kind of learning from self-managing Maple and the work on the single families. Oh, what I wanted to add is we also kind of dabbled in sort of the house flip thing. So we did 2 flips, which I don't ever want to do again. It was an awesome learning experience, but unless you have your own crew and you're a master like Tristan, it's really hard, I think, to make money off of flip. So I think that then sort of set us in the direction of like, we want to get more multifamily properties. Like we really want to scale and get larger portfolios and focus on that. And so that was the original TakeFlyte Properties group. And then, we ended up selling Maple. We made, I think like a 400% return, Matt. It was awesome.
Wow.
Yeah.
And that launched us into doing a 1031 exchange into a new property, which is where Chris comes in, right? And that was the Rose Street acquisitions that we did in Arlington, Texas.
Yeah. So 2 quick things to add to Mike's story. So we also bought a bunch of townhouses on the same block. And the first townhouse that we bought, I was like new to it, and we needed granite countertops. So I do this Facebook post. Who's got granite countertop? Who's got investor-friendly granite countertops, right? And Tristan responded.
Okay.
And he's like, I got the hookup.
Yeah.
So we actually met Tristan in like 2016, 2017. He sold us a granite slab. But the funny thing about Tristan is you got to pay Tristan for his work.
Sure.
So he comes in, he removes the old countertop, he puts the new countertop in, he puts the sink in, and he's like, the plumbing's on you, pal.
Yeah.
So we had to hire a plumber in to connect the trap to the sink that Tristan put in because he didn't want to do it.
Smart man.
All right. He's got to get paid for his time.
Well, because you asked for a slap.
Apparently I got to be more specific with Tristan. So then, Mike and I are having this conversation about, how do we start to scale? And, Mike's been in IT for a long time. I've been in IT for a long time. And I'm like, okay, how do we take that and find additional partners and or investors? So I had worked with Chris back in 2010, 2011. We were both working at T-Mobile. And I remember him, he was buying at this he was having this new co-op or new condo built in what was called Soha, so South Harlem. It was like this kind of bougie place on the Upper West Side of Manhattan. And I was like, you know, he's always done very well, and he's been super professional. So I reached out to him, and he calls me as his phone's about to die at the San Gennaro Feast in like September of 2016, 2017. He's like, I've been watching what you guys are doing, and I like it. So Chris, tell the rest of the story.
That's right. I was at the San Gennaro Festival. I think with a fried Oreo in one hand and a Zeppeli in the other, in Little Italy, Manhattan. And I just, you know, it was during the pandemic, and there wasn't much to do besides, you know, catch up on Netflix, drink a lot of your favorite alcohol, and kind of staying indoors, especially in New York City, where I was residing at the time, South Harlem. But I would obviously be on Instagram, and I would see what Matt was doing and what he was posting from a fix and flip perspective, which now aligns to the timeline that Mike was mentioning. And I was like, this is awesome. Like, I remember Matt, like we were tight when we did T-Mobile enterprise sales. He was an absolute hustler. I think him and I, we were the only two people on our team of 8 where we used to cold call all day long that actually closed the deal in that role after 12 months of trying. So I was like, this is great. Let me give him a call. It looks like we have some like-minded things going on. And I'll ask him what he's doing. And yeah, but when we spoke after my battery got charged, and we were able to talk more than 5 to 10 seconds, I said, you know, what are you up to? She's like, you're doing some good stuff. And he was telling me, I'm like, that's great. And I told him what I was up to, you know, investing in college housing and doing Airbnb investing, and both active and on the passive side, rentals in Manhattan. And he's just like, well, what do you want to do next? I was like, I don't know. I just know I want to retire earlier than the age of 65 and not have a sales quota for the rest of my life. Because as Matt mentioned, you know, I've been in technology sales for 17 years. And although it's been a great run, you know, every single year you start off at zero, and you got a lot of stuff that you got to go sell, and it gets tiring after a while. And I was a landlord since I was 25 years old, and it was a great experience. And I said, how do I get more of this, you know, income, this type of income, not the income that's really, really, really hard and 16-hour days and stress over quotas and this, that, and the other thing. I want this other type of income, you know, that Kiyosaki puts in the I column. And I said, let's work together. And he's like, well, what do you think about maybe doing some investing in Texas on multifamily? And it triggered a conversation I had with a tech relationship dude that I used to work with. He used to be one of my customers. And he said he started investing in Texas, and he bought a building for 250 doors. And he said, it's all about the number of doors, bro. You got to get more doors. If you want to get your, you know, income realization goals accomplished, you got to go bigger. You think bigger. So I immediately said, Matt, I'm totally interested in this. He's like, that's great. Let's set up a call with my partner, Mike, who's also comes from an IT background. And I was like, this is great. And then that's kind of where it started, where we started looking at assets in Arlington. And I didn't know anything about it besides the Cowboys playing there. And I quickly started doing some research there. We started looking at some properties. That's how it all started with TakeFlyte Capital.
Love it. And just to speak, like, when you get, like, I love hearing these stories, because it just, there's never any secret sauce. It's just the power of your network, finding opportunity, finding like-minded people, and doing something together, right? Like, that's what also holds people back, is like the discomfort maybe in doing that. But that really is, this business is simple, not easy. Not complicated though, right? The power of your network is going to be the power of your ability to scale, your ability to find like-minded, driven people that have a similar ideology to what you're trying to accomplish is going to be, you know, integral to what you're trying to accomplish. Pick up the phone, find people who are trying to do what you're doing, and align with them, and great things can happen.
That's exactly right.
Mm-hmm.
And for me, the hustler part that Chris was saying is one of the most important things. You know, I have huge demands on myself, and frankly, I have huge demands on others, and I'm not going to surround myself with people that, you know, want big things but aren't willing to put in the work.
Yeah.
Right. And having worked alongside Chris, we were the only two people on this team that ever sold anything. Right. Hustling around the streets of Manhattan in 95-degree heat and suits, slinging cell phones. Right. It was tough. But you know, I watched him and what he was doing with the short-term rentals and how his career had grown too. Like, you can tell a lot about people by how their career grows or doesn't grow. And I just knew that, you know, he had a passion and a penchant for it, and he had done a lot on the LP side at that time. And he's like, I want to make the jump into a GP.
Yeah. So what was that first deal that you guys did together, all three of you?
The first deal we looked at, or the first deal we did?
Either.
Yeah.
So, and we looked at a bunch of deals early on, and we took some very painful L's early on. But the first deal that we did was the 16 unit that we talked about with Gino in Arlington, right? So, Mike, you want to tell us a quick story of how we found 313?
Yeah, I think so. 313 was, I think that was an MLS deal, right?
Right.
It was straight on the MLS, and so, you know, we worked with the broker, and I think we just, you know, we looked at it, we toured it. I think this was like an airship situation where, you know, they were moving on, and you know, we just jumped on it. So
nice.
Yeah.
Very cool.
Yep.
Back when MLS deals were
They're still out there.
They're still out
you
there.
know, you're few and far between. But
Yeah.
I mean, if you set your preferences right, you filter out the crap.
100%.
Right. So we do 313, and we bring in this contractor. Actually, so we close on 313, and then like 3 weeks later, this is 2021.
Okay.
Right. 3 weeks later, we get a call from a wholesaler out of the blue.
Mhm.
It's like, I show you as the owner of record at this address, and I'm under contract with the property next door. Do you want it? And then like a half an hour later, I get the email from the wholesaler out to his list. And I text Mike, and I'm like, dude, this thing's in play right now. And so we jump on a call with the wholesaler, and we're talking about price, and he just wanted way too much. The next day, Chris gets a response from a direct mail piece he did to other owners in the area, and the owner responds directly to Chris. So now Chris is directly in touch with the owner.
Yeah.
The wholesaler's like, the seller's not responding to me. I don't know what's going on. I'm like, I do. So it's just like the to your point, it's simple, not necessarily easy.
Yeah.
If we hadn't done the direct mail piece, right, after we closed on that first deal, we probably would have still bought the second deal, but we would have paid a whole lot more.
You would have paid more, and you never would have had that
And
connection.
I think Chris is still sending Christmas cards to the seller of the second deal, and he's getting invited to his daughter's wedding or something, from what I heard.
Yeah, no, listen, it was. I mean, we believe in doing good business, and you know, he was an old school Texas guy, and we built a good relationship with him, so much so that we did another deal with him, not too far away, right near the University of Arlington. So you wouldn't do more business with someone unless you had a good taste in your mouth from the first experience. And you know, back to your comment or joke before, Brian, I was always taught by my mentors that it's really hard to find good deals on market. So, you know, there's a lot, I put a lot of effort over the years in doing a lot of direct mailing. And I was like, let me show Matt and Mike some of the fruits of this labor. And we got to bounce back pretty quickly. And again, that one relationship wound up getting us 2 transactions to date. And I'm still tracking a third where he knows the owner and he introduced us, where hopefully they might give us a call back one of these days. But yeah, I mean, you know, doing that first and second deal, you know, one thing I've always heard is raising capital is the easy part. The hard part is actually, you know, finding the good deal. And, you know, when we combined our 3 networks of people between Matt, Mike, and myself, you could tell there was all these people that were really curious for many years what we were doing. Like, hey, what are you doing in the real estate business? Let me know when you got a deal. And, I trust you, and just let me know. People that we have relationships, family, friends, colleagues in the tech business who are all high W-2 earners, but don't have time to go look at the best stock or the best mutual fund, or definitely don't have time to do due diligence in DFW, Texas. But they trust us, and it was a great experience.
That's awesome, Chris. And you're hitting the nail on the head with the capital raising part. I mean, you gotta pick up the phone and make the calls. You got to build the relationships. You always have to do that. When you have a good deal, you shouldn't be, raising capital should be the easier part, because you're bringing value to every single one of those partners. And I don't want to sidebar us too much, but I do want to dig on this a little bit. The direct mail campaign that you did do that showed some results. What did that look like? How did you find, who you were targeting and all of that? I like to bring as much actionable advice as I can. So when you decided we're going to conceptualize what a direct mail campaign looks like, how did you decide on your avatar, and what did that strategy look like, Chris?
Sure, absolutely. So we would leverage a software called PropStream.
Sure.
PropStream is about $99 a month, give or take. And basically through PropStream, you can find out who the owners of any property pretty much across the United States, both single family, multifamily, so on and so forth, just by typing in the address. And it tells you information like who's the owner, how much the taxes were, what the mailing, and specifically where the mailing address is and where that owner is. It's usually a PO box or whatnot, or sometimes it's an actual address of a residence. Long story short, there's multiple. Once you get all that information, you can run a campaign, and that campaign, let's just say, for example, the one that we ran, where we got that owner to respond to us. Let's just say it was called C-Class DFW multifamily under 50 units. Okay. You could even do it by the unit size and so on and so forth. So once you get that information, you got a couple different modalities you could go down. You could have pre-made professional-looking postcards that PropStream will charge you just a little extra for to kind of send out from a print shop that they use. The only issue is that the data and history shows that you don't get as many responses to those as you do a personalized letter. Which gets more responses, but is so much more time consuming. Yeah. So to put into perspective, I was, sending out personal letters. Hey, my name's Chris. I am not a real estate broker. I get that right off of I get that right off the bat, saying I'm not a broker. I'm an investor. I own some buildings in your area. I'm interested in buying more. Here are the advantages of going direct to seller. If you weren't aware, direct to buyer, direct to seller, if you weren't aware of them, I'm only looking at a couple of things, and give me a call as soon as you can if you're interested in talking more. And it would have their address. It would be personalized, so it sounds like I know what I'm talking about. And then I would literally, it's funny, but I know there's better ways out there, so I know you're gonna laugh. But I would literally write out the address, lick stamps, and lick the envelopes of 300 to 400 letters. And it was extremely, extremely time consuming. And similar to cold calling in sales or business development in any business, the hit ratio was maybe 3 to 5 people might respond out of 300 plus letters. But if you think about the savings that you can make on buying it right, and buying it below market versus it hitting the MLS and going to bidding best and final wars with other sellers, it's worth its weight in spades. Yeah. And that's how we would get responses back from those letters.
I love that, man. Thank you for the breakdown. That's awesome. And you know what? We have a very similar mindset around this. There definitely are better ways. And I've done when in my flipping business for the longest time, it was driving for dollars in yellow letters. And those yellow letters were licked, stamped, handwritten address by myself and my wife every Tuesday night. It was like a mess in our house, but I don't know. Honestly, I enjoyed it. it was kind of one of those things that was a bonding thing for us. It was something we were doing together. I could do them for 64 cents a letter instead of 97 cents. And over time, at scale, that really adds up. It probably wasn't the highest, best use of my time, but we got a lot of deals off it.
Nice.
You know?
How often do you get cursed out by homeowners? And
Yeah.
how do you deal with that?
I'll go first on that. Well, a couple things. So just funny enough, because so it would happen not so often, Tristan, but some of the people that would call back, and obviously you see the Texas area code, I get all excited. Some people would call back and they'd be pretty unhappy. And the root cause of their unhappiness was twofold, if I think about it. One, they saw my New York address and they were like, what are you going to do from New York, you New Yorker, with my Texas real estate? Like, you go stay up in your state and I'll stay in mine. That was one thing that I kind of felt for. The second thing is that they just didn't really understand what was going on. Where did you get my information? How do you know that I own this? And I'm like, oh, this is public information. I apologize if you weren't aware of this, but this is all public information, and I'm not pressuring you in any way, but just wanted to see if you were interested. And if so, let's talk about why we should just do a direct deal together versus you listing it on the MLS. So I try to talk them down off a ledge, but sometimes people will.
Yeah, I think any type of marketing that you do, you're always going to have the people that don't really like or respond with your message. I would say, the direct mail that I've all done has all been for single family distressed properties, and a lot of it is driving for dollars. So I think the issue that you run into there, and you know this very well, Tristan, driving for dollars, you're usually looking for just a couple things, right? Like overgrown lawns, maybe busted windows, roofs, and stuff like that. So the angry calls you get are from the person that has no intention of selling. It's probably a nice house on the inside and everything. They went out of town and didn't mow their lawn. They're super mad at you.
Man, I got a story. Yeah, I got a story to tell you guys. One time I was walking in front of the house, right? And somehow the guy knew that I'm about to knock on the door. And as soon as I walked close to the door, looking through the windows first, I saw him with a shotgun pointed at me.
Oh, no.
Yes. And he knew it. But probably what I think he knows is because too many people walking and knocking and bothering him and all of that, right? But anyway, that's part of the business that you cannot do without it. So just deal with it and move on, right?
Real estate investing in Texas.
Interesting, right?
Stick to multifamily.
That's it.
Well, this is actually okay. So I don't want to spark a debate here. This is a great conversation though. So Tristan, outside of being an amazing contractor, your flipping has been your main vocation for a long time, right? Mike will never do it again. I fall somewhere in between. I've had flips that have been amazing, and we've made $100,000 in 3 months. I've had flips. I was talking about one earlier where I made $5,000 in 11 months, and it was not worth the stress at all. So I see both sides of this conversation. Tristan, why has flipping always been so attractive to you?
Well, first of all, because like everybody agreed that, first of all, we have to get the good numbers, right? You have to do your own due diligence. Most of the times that I find, I agree with you, Chris, and everybody else, that getting off-market deals can save you a lot of money. So most of the time, I would say 95% deals that I got is off market. I'm giving you one example right now. I am closing 2 deals right now. Actually, tomorrow, I got the HUD and everything came in. One is for $30,000, and the ARV for that house is somewhere between $245,000. I talked to my business partner. We're gonna put in probably maximum $42,000. Right, we call it a day, right? That's why it's attracting to me. And another thing that Matt brought up is that finding contractors is a pain. I brought it up before. That is one of the biggest problems that we are dealing with everywhere, not only Texas. So finding subcontractors sometimes, like Mike brought up before, sometimes you have to deal with the people. Like say, if you hire a contractor, they would bring in people on the street, homeless people. It happened to me before. One of the properties that I did, I hired a subcontractor, and next day I went over, I saw him, a guy, man, climbing over my roof, and he was like shaking. I was like, man, is that one of your guys? He was like, yes. And why is he shaking? So I asked him to climb down, because I don't want anything to happen to my property. Man, I smell like, alcohol coming out of his mouth.
Oh no.
Right. So next day I knew that it was like, not one of his guys. And I talked to him, said, no, you're not bringing him to my properties anymore. You either find a right guy for the right job. I'm willing to pay you. Right. But not cut the corner and getting people on the street. I'm willing to help the people on the street, but not in my properties in this situation. So, but anyway, so finding the right contractors, paying them is the right thing to do. The profit, like Brian, like you asked, it's really finding off market with the good deals is very attracting, and you just have to find the right deals that works for you. The reason I own full-time guys to work with me is because, again, finding contractors is just the biggest pain in the ass for everybody here. Right. I mean, if you go out there, you talk to contractors, they can promise you the entire world. They can do everything. They can do anything for cheap, for a good price. So when I go out there and I talk to people and whoever come to me with that kind of mentality, I stop talking to them. Yeah. Right. So I'm not looking for cheap labor. Absolutely no, because cheap labor is no good. Yeah. And so good ones are always busy. So they don't have time to play around. They don't have time to work for somebody else that they don't know. Right, that's just my experience. But anyway, so I own my full-time guys, and the deals that I am not a big-time flipper. I do about 2-3 a month. I'm cutting it back now. I'm leaning toward buying and hold more, but I'm still flipping to get the capitals coming in. So it's pretty attractive sometimes. I agree with you. I mean, I never lost money on any of my flips until now, to be honest with you, because the market changes. I did not do it. Was part of my fault that I did not do diligence that well. Do my own due diligence well enough to understand the numbers and everything, due to the distance, due to the time frame that the seller wanted to sell. But I'm making money somewhere else because I am buying other properties from the same seller, that I'm getting good discount. So I lose some, I make money. So that's part of the game. So with that being said, that's why I'm sticking. I mean, I'd like to diversify my investment now. That's why I am with TakeFlyte right now, and I love it. I mean, I just love everybody, Mike, Matt, Brian, the way that they underwrite deals, the way that we work together, the process goes, and everything. That's why I would love other opportunities to work with you guys. And I'm still sticking to my flipping to make money to feed my guys per se.
Sure.
Yeah.
Likewise.
So you talked about simple, not easy, right? Yeah. So we bought a slab of granite from Tristan 6 years ago, right? And I had kept in touch with Tristan on Facebook and watching all of his product, right? He does tremendous work. I've watched probably hundreds of flips that he's done. And so he had credibility with me, right? Even though he didn't hook up the P-trap to the granite. We'll forgive him that one, right? And so he calls me one day, he reaches out of the blue, like, hey, can we have coffee? And so we went out to Starbucks in Garland, like, I don't know, last summer. And he's like, I want to get into multifamily. And, we talked for an hour or so, and then nothing, right? It was hot time in the market. We couldn't really pencil anything out. And then, November of last year, we got a deal in Arlington, right? 18 units, 4 of them were burned. We had a GC quote the deal. A guy who had done some work for us before, great guy, right? Finished on time, great work, no complaints, also very reputable. But we just couldn't get the deal to work. And Mike and Chris and I are like knocking our heads. We really wanted this deal. It was right in our pocket. How do we make this deal work? And I said, let's call Tristan, right? He's got his own crew. Let's see if he can come in and what value he can add. And sure enough, he took a look at the deal And he was able, like, without Tristan, that deal does not happen.
Yeah.
Right. And between him and his resources and how efficient he runs his team and the cost that he was able to get for us, that made the deal work.
Yeah.
Like, without Tristan, that deal would not work.
That's awesome.
So it's like the ongoing power and necessity of building your network and working with people who have credibility and get stuff done.
That's all it is your network. And just to jump, so to find the happy ground, between, Mike and Tristan's perspective, even just you describing, your day-to-day, Tristan, I think that the reason that people get, a little bit turned off by the flipping game at times, because it truly just isn't a part-time job. It's really just not something you can do very profitably while you're doing other things, because finding deals, especially in single family, because single family is something that there's a much wider buyer demographic for. Most people can afford to buy one flip. You're already competing against everybody else for the publicized deals that are out there. So you've really got to have systems to find off-market deals. You've got to be able to keep your costs down and protect your profit margin. That is why multifamily investing is so much more attractive for so many people. It feels like it's a little bit more difficult to stomach because it's bigger deals, but you can come in as an LP, get great returns on a good deal, learn the business, build your network. And what you tend to find out is, pound for pound, managing a flip or raising capital for a deal that's a really good deal that pencils well, I wouldn't say one is any more work than the other, but the upside on the multifamily side can be exponentially higher long term.
Agreed.
And also the downside, in the sense that, we have an 8-family apartment building in Arlington. When you have one vacancy in that 8 unit, it feels a lot different than our 18 unit.
Sure.
Right. So you're spreading out that risk, in that downside where you don't feel it as much. And then if you're in single family, one vacancy is 100% vacancy or 0%.
True.
0% occupancy,
Yes.
You're not wrong at all. 100%. I mean, I think Tristan's strategy, obviously, with the single family side is you've got to build a relatively large portfolio. And that, I think, is where a lot of people just getting into the real estate investment game, if your strategy, you're a W-2 guy and your strategy is, I'm going to go and I'm going to buy one rental a year, I'm going to put 25% down. It will take you a long time to build a portfolio that really generates the type of cash flow that helps you make any sort of real dent in your W-2. If you're a full-time real estate investor and that's what you do, you probably have access to better deals. You probably have a little bit more capital put in them. You probably have a network that's going to help you with some more creative financing and things like that. If you're a W-2 high-income earner, you should be taking that money and finding a way to put it into multifamily, just straight up. I think whatever way you're going to do that, whether you're going to learn the GP side or just LP, that's going to be dollar for dollar, pound for pound, long term. That's going to be a better strategy, I think, than trying to eke it out with one door at a time.
Yeah, agreed.
Yeah, I agree. I mean, Chris, I agree with you. So that's just what it's all part of the business, right? Either it's a multifamily or single houses. I mean, to help avoid that, we have to run the background on the tenants screen, right? That will help tremendously. And so every single time when I'm dealing with a vacant wanted to move out, I always sit down with them and say, hey, what's going on? How can I help you? Blah, blah. So instead of having them move out, I would sit down with them and work with them and say, hey, what else can I do here? Instead of raising the rent, I keep the rent still the same. What else can I do for you? Most of the time, I'd say 85% of the time, tenants agree to stay back unless they have to move out the state, unless there's something else happened to them. But most of the time, if you work with them, they're willing to stay back with you. You know what I mean? So that's what I do.
One of the things I wanted to just add that really resonated that you said, Brian, is, from my perspective, definitely when you're a W-2 earner, I mean, it was a struggle for me, like driving out nights and weekends to go check on flips, right? It was brutal. And, thinking about on the multifamily side, other than the acquisition, doing some underwriting. I mean, a lot of that stuff you can do, at home. You don't have to be on site. And then same thing with the capital raising, right? I remember back to the Rose Street property, the 16 unit we bought. That was our first capital raise, like where we needed to go raise money. And I didn't know what was going to happen. Like we didn't need to raise a lot, but I was partially terrified. Like, are we going to get the money? We not? But it was super easy, right? I mean, just with our friends, it was our friends, family network. I mean, I think Matt, Chris, and I did one presentation, and I think like within 20 minutes, it was like everybody's like, we're in. So I'd much rather take that angle than be driving out and trying to manage a flip. Like Tristan does a great job. Other you guys do great. You have your crews, but that was the attraction to kind of the multifamily side for me.
Yeah. And by the way, Mike is 100% right. We had that deal subscribed in 20 minutes, and every single one of those investors came in on the one next door that we closed 3 months later.
Oh, wow.
Every single one. Like we thought the first one, I mean, the second one was everybody before the end of the call was like, yeah, we're in.
Wow.
Yeah.
I mean, that's the power of having good deals,
Yep.
right? I mean, everything's work. Something that you do is going to be work. It's just what you're choosing to do. And
Yep.
so for a W-2 earner, managing projects like flips, I mean, that's a whole nother full-time job.
Yep.
But I think we have I think we have a lot of limiting beliefs, especially when we first get started around raising capital and things like that. I hope that we have a few limiting beliefs, because if you don't have any limiting beliefs around handling other people's money with responsibility, you might be a sociopath.
True.
So I hope that you have some trepidation around your first capital raise, because that means you care very deeply
Absolutely.
about the responsibility that you're taking on.
Yep.
Once you realize that you're not calling people and begging them for money, you're presenting them with an opportunity to build wealth, your whole mindset around it changes, and it does become a lot easier.
Yeah.
Right.
So I think the other thing that really helped was market knowledge.
Yeah.
So Mike mentioned before that we had exited our deal at Maple Street. That deal closed in August of 2021, like a couple of days before our investor presentation for the next Arlington deal.
Well, there you go.
So we had, like, we literally brought up like a picture that says, here's the new property, here's the one we just sold. We know the rents, we know the tenant profile, we know the area, we've driven by this place, right? So I think when you're an LP considering a GP, or a GP that gets very, very spread out, right? Gino gave Mike and I some guidance, like on one of our first calls with him, like be very narrow focused, right? I tend to stray from that sometimes, right? But there's not a broker in North Texas that doesn't know that TakeFlyte has a presence in Arlington and that we get phone calls, right? And when we go to our investors and say we have another deal in Arlington, they know how our previous and current deals have performed. They know we know the market. They know we know the property management. They know we know the contractors we've just executed there. And that helps take one objection off the table from people that are going to potentially invest with you.
100%.
Right?
Momentum begets momentum.
Yeah. And I think there's definitely some GPs and syndicators out there that are just hopping around. Right. And God bless them. I don't know how they do it, but it's hard.
Yeah.
Right. To know all of those markets in and out and be able to speak with investors and confidently raise money and know the assurances, or know the risk profile and know the assumptions, not assurances, the assumptions for each of those markets, as well as I think we do Arlington and a couple other places where we've invested.
Well, cocaine's a hell of a drug. So where did that come from? I'm saying, if you got to have a lot of confidence and energy around what you're doing.
Holy shit. Where's your head?
That was a little Chappelle Show throwback.
Oh,
man. Never mind. I'm trying to make TV. But no, that's actually great advice for anybody looking to get in their first investment. I've always learned it's GP before deal.
Yeah.
Right. Because if you're working with good GPs and good operators, you're not going to be presented with bad deals. And so you need to focus very much on who you're partnering with, even before you look at the deal itself.
Right.
And I think the GPs that get spread very, very thin, while certainly ambitious, you can't be an expert in all things.
You can't.
Yeah.
I mean, unless you have a huge team, and some of these folks do, but I see, one day Houston. The next day is Boise, Idaho. The next day is Kansas City. The next day is Provo, Utah. I'm like, how do you keep up with all of that, know those markets to the point where you can go out and raise 7 and sometimes 8 figures to get some of these deal closed and be able to understand the market dynamics and be able to report back to your investors? I think you got to have a really big team in order to do that. And I still think it's going to be very, very challenging.
Agreed 100%. Well, boys, what do we think as we start to wrap this up a little bit? I want to be respectful of everybody's time.
Yeah,
it's been a heck of a journey for you guys.
I agree.
It's been a pleasure learning and hearing the stories. And
let's ask one question from everybody, because we've been wrapping almost every show up along these lines. So, question for the crew: what are your thoughts on the current market, and where do we go from here?
I guess I'll go first. I definitely think, the market has changed. I think what we're seeing is, obviously higher rates are having an impact on things. I think which is somewhat refreshing, kind of the chaos of, 20 offers on a property, multiple best and final rounds. Those days have seemed to have settled down. I think brokers still try to push that a little bit to try and create some urgency, but I think what we've seen, recently is deals that have, sort of gone through that and then the seller never accepted an offer, or, deals that went under contract and then, they sort of fell through and then they've come back to us. So I think there's still some separation between, sellers meeting the market, still some expectations of higher pricing. And so penciling deals is a little more challenging, but I think there's still deals to be had, right? I think at the end of the day, if you stick to your underwriting fundamentals and you pencil it in, and if it works, you make an offer and you try to get it, right? So there's still ways to make money, at least in my opinion. It just comes down to finding the right deal at the right price.
I couldn't agree more.
Agreed.
Honestly, I think like we've batted this back and forth internally for so long. I think that there are more deals out there now. If you look
more actual deals,
more
not opportunities.
Yes.
Huge difference between opportunities and deals. That's something I've come to.
I agree.
Yeah.
Right.
Chris, what do you think, my friend?
I went to, as Matt and Mike know, I went to a investor summit down here in Wall Street, Manhattan last week. And there was so many good nuggets that came out of it with professionals from the lending space, the property management space, the family office space, that were all kind of weighing in on, what the future is going to be bringing. And really, everyone admitted they had no crystal ball on what's to come. But some of the common themes were that, it's going to be 3 times as hard to raise the same dollar as it was 2 years ago, especially when you're competing against treasuries, which is arguably the safest paper in the world, paying at 5.3, 5.4%, interest. So, when I think we're thinking about what our buy box looks like in our criteria, Matt, Mike, and I have arguably said, hey, listen, it's got to have a year-over-year cash on cash return of something that beats a T-bill. Otherwise, some of the people that we thought might invest with us might say, I'd rather go do this because this is safer. Putting the tax benefits of real estate investing aside. We also heard from lenders. Well, I heard from lenders attending the summit that they said, everybody's talking about how much the stress is going to be out there. A lot of distress, lots of opportunities, and they said, yeah, there's going to be some, but lenders don't want to be in the real estate business. They want to be in the money lending business. They don't want to fix the toilets or address the cracked countertop or fix the cabinets or even collect rent.
Yep.
So there were some lenders that said, hey, there's going to be banks that are going to try to work with that GP or that owner to see if potentially restructuring the loan. I think the advice was, if you think that you're underwater or you think that you may be in trouble, when it comes down to refinance time, get out in front of that lender early, get out early, be proactive, and so on and so forth. So, there was a lot of talks of that too. And those are some of the things. I think it's going to be interesting over the next year or two. When it comes down to interest rates, the overall mantra was that it was going to be higher for longer. So everybody was trying to guess whether or not in 2025 it's going to have a 5 or a 6 or a 7 in front of it. But everyone pretty much agreed that it's not going to be anything that we saw during the pandemic, which was great times. So that's kind of what I'm thinking about in the future.
I think that's such fantastic insight, and I don't mean to cut you off, Tristan, as well, but I've been thinking about this so much and just trying to be realistic about what the future looks like theoretically. And a lot of people kind of get off on this doom and gloom ideology, the big crash is coming and things like that. There's some things to take into consideration. We're just talking about the realities of what the market to come is. One, anybody who's talking on a theoretical basis around, a debt crisis and stuff like that, and all the bridge debt coming through and things like that, probably don't have a good grasp on how expensive it is to repossess an asset for a bank. It's not something they want to do at all. Like we talk about, the Great Recession and the single family side, it was incredibly expensive for lenders to repossess single family assets. The foreclosure wave that came through, banks were not happy about it. They didn't make money. They had to hire out exponentially more manpower to process everything. You're not making your money back as a lender at all. Like, you're getting a negative return and you're having to hire people to bring you a negative return. It's basically how it fundamentally works. And so you're going to have lenders and banks that want to work, like Chris just said, get out in front of it if you think you're in trouble, because it's going to be first come, first serve for restructuring loans and making sure that deals don't go into foreclosure, right? And on the opposite side of that is, you might not be able to do that for everyone. And so if you don't get out in front of it, you might be one of the ones that your asset does turn into a deal for somebody. And so while I don't know that there's going to be this looming crisis where all of a sudden you see this just huge wave of multifamily foreclosures, I do believe that the bank's got to make money themselves at some point. They can't restructure everybody's loan. And so there will be deals out there. So if there's awareness on both sides, get out in front of it if your asset's in trouble and be one of the ones that works with your lender to restructure. And also be patient as a buyer, because not everybody's going to get bailed out, if that makes sense.
That's I continue to come back to the fact that there's a lot of capital out there, and then and I think that'll help buoy the market. But I hosted a webcast yesterday, and I was talking to one of our guests, and she said that she's been contacted by several banks that have asked, with assets that are in trouble, and asked her to take over the property management side because they have faith in her ability to turn the deal around. Right. And so I think banks are starting to kind of outsource some of that effort by reassigning the property manager or demanding a certain property manager to run the asset. And to me, that's a sign that the banks are trying to get innovative. Right. So Tristan, from you, where do you think this market's headed, my friend?
Yes, I think the market changes for sure, right? As we know that because two reasons. One is because of the interest rate is getting not high. People think it's high just because we dealt with 2-3% a couple of years ago. We're not going to get that back again, right? So 8%, 9% is average, I would say. If we look back years ago, it was 14%. That was high. But now we're dealing with 8%. It's not high at all. It's just that the mentality, the psychology that people are dealing with, they're losing confidence now because of what we saw before compared to what we see now. So, and also the people holding on to houses right now is just because they got 2-3%. They don't want to sell. Those people don't want to sell. So that's just why the market kind of, it's different now. But what I'm seeing is there are opportunities for us to grab. Honestly, I've been thinking about this for the last few months. I feel excited when the market goes down. Really, I am feeling excited when the market goes down, because we will see investors withdrawn from the market. We'll see people don't want to get involved with real estate anymore. They will sell. They got panicked. They panicked. They sell. They got stressed out. They sell. Therefore, there are opportunities for us to grab. So the question is what we do need to do to adapt to the changes, and what we need to do to take this opportunity. And if we stick to the market and do it right in the next 7 years from now, you will be glad that we stick and we fight. We are still in real estate. So that is what my take. And again, like I said, but I think the commercial side will get hit hard because of the loan, the interest loan, right? They have to renew it. But for the residential side, the inventory is still low. We know for sure, that's data shows, right? So I'm not worried about it. I am, again, like I said, I am excited and I'm ready for it's not going to be a crash like back in 2008 or anything. We see that because the inventory is still low. But there will be for sure opportunities for people to grab. So get ready for it.
Yeah. I like what Tristan said, or I said something about being innovative before, and Tristan's talking about kind of adapting to the changes. Tristan is a great model of that. Like, I think he's bought, 2 fire damaged houses in the last 30 days. So word on the street is he's just going to drive around and follow fire trucks around and then go make offers. He's adapting. I love that.
That's a good way to get shot.
That's it.
Yeah, you're right, man. I'll be right in the window with my shotgun.
Oh, man. Well, boys, we really appreciate the time, man. We've got to do this again. This was a freaking blast.
This was a lot of fun. Thanks, guys, for finding time during the day to talk to us.
Absolutely.
Thanks for having us.
Yeah, thanks, everyone.
Check out deepbluere.com. Check out TOREtourstudios.com.
And shameless plug, go check out TakeFlyteCapital.com. TakeFlyte Capital.com.
I was about to ask where you can find you guys. TakeFlyte with a Y, Capital.com. Boys, we got to all partner on something huge together, and I think there's going to be opportunities coming down the pipeline. So I look forward to it.
Awesome.
Thanks, everyone.
Appreciate it, guys.
Cool.
Good day.
Thanks, guys.